Welcome everyone. Welcome. So again, apologies about the delay. Hopefully it didn't hinder your guys' nighttime schedule. But thank you guys so much for joining. Again, it's a great new trading week. We've been having a great week so far, so hopefully you guys have been too as well. But let's get right into it. So first of all, before I talk about what the title says here, right? VIX expansion incoming, or the potential expansion of vol. I want to go over IWM. So IWM, we've been trading this really nicely. So basically, just a quick review, very quick summary. I want to keep this very succinct and concise for you guys. Basically, we just grabbed a really good position once we saw the retest of 189.50 and once it held that 189.50 level too. And I personally added more once we started moving over 190 and continued to hold 190. So again, this one, I wrote this back in like early January, if I remember. Or actually, no. It might have been late last week of December, to be honest. Yeah. I'm pretty sure I wrote this in the last week of December. And we actually got that. So we actually got this retest of 189.50 and 190. So this 50-cent range really held as a good area of demand or a good area of support. And we're able to retest the daily 50 SMA on top of that. And we continued to move up higher. And so, you know, I think this is really good that we are seeing some very good bullish movement in the small caps. Now, obviously, we're probably going to need a little bit more consolidation before we can move on higher, which is why I adjusted this price path that I've drawn before, and I've shown you guys this in previous live streams and also in my private, now public CFO Swing and Watch technical analysis videos that I sent out to my members, my private members, and my students. So again, you guys should always watch my videos when you have the time. Sometimes they can be long, sometimes they can be a good amount of time, like an average 15-20 minutes, but sometimes they can go over 30 minutes. But again, I highly recommend you guys to always watch my videos because you will learn a lot. And I always stress the fact that knowing the fundamental basics on technical analysis is so important, right? And the best traders out there use technical analysis. The best active fund managers use technical analysis, right? And on top of that, they also use some math too. So they have a strategy, but it's based on technical analysis, right? That's the ground basis, the fundamental basis of what they are using analysis wise, right? So again, just continue to watch my videos. I have a great beginner's trading guide as well that you guys can get. And if you guys are really interested in that, just let me know, DM me, and we'll go from there. So, again, we can talk more about the expansion of vol, but I need you guys to remember that the markets are sitting at highs, right? The markets are sitting at highs, which means really it's a free-for-all for both buyers and sellers on where they want the price to go next, right? And the only thing that they have are, well, whole number levels. And we don't have any previous data points or levels like resistances or previous supports to really go off of. So again, uncharted territory. And so these whole number levels are very much important. And I've defined some of those levels in my previous video. It's a video that I titled Disney to 100. So make sure you guys watch that. It's the most recent video in my channel, other than this live stream. So make sure you guys take a look at that. Okay. And I think it's really important that you guys understand that since we are in uncharted territory, it is pretty interesting to see that the volatility here, okay, VIX, the volatility index of the S&P 500 has been absolutely getting crushed. Okay, and today we ended up closing really close to that 12.50 value. And that's something very important to note, because whenever we're under 12.50, which has been a huge multi-year value here, kind of a quote-unquote support if I go on a monthly time frame too, right? This 12.50 has been a huge level, which also induces and introduces, right? Induces and introduces volatility, which means expansion of volatility. Yes, right now we're still seeing a very big compression of volatility as the markets continue to trudge on up higher. But this is an opportunity for the markets to become very volatile as we also head into that seasonal weakness of February, the middle of quarter one. So, this is the reason why I really wanted to talk about the expansion of vol, the potential expansion of vol as we head into the end of this month, which also has a huge catalyst. Okay, now this is a great segue into what I want to talk about today. Of the first FOMC meeting with the first official rate decision, the benchmark interest rate decision, or the federal funds rate for the year of 2024. And so far, the market has been pricing in a really high probability that, well, they're going to continue to hold the rates up high, right? And especially when we got that slightly higher and hotter reading on the CPI, it'll be pretty interesting to see what can happen with the rate decision, because again, PPI was cool and CPI was a little bit hotter than what they expected, and it's kind of I would say the right word is kind of wishy-washy. The Federal Reserve is really trying to be careful to not cut interest rates too quickly, and also not keep interest rates high for too long. So, they have a lot of different data to go back to, especially in the 1970s. And again, they're either going to set a new precedence, or they're going to just use the previous historical data and figure out what they can do right now and kind of repeat history. But it's a really tough position that they're at now, since the market is currently pricing in the first rate cut in March, the next second FOMC meeting. So, obviously in January, I also think, I agree with the market that they will continue to keep the rates up high here, and they won't think about having another interest rate hike, since last year, right before the year ended, Jerome Powell and the Federal Reserve members they all agreed that there aren't going to be any plans yet that they will be having any interest rate hikes, okay, in 2024. So I'm going to trust their words for now, especially if inflation does not move up higher, since they haven't been able to control the labor market, and obviously they haven't been able to uptick the unemployment, the record low unemployment, or just regular unemployment. Usually from an economic standpoint, I know there's probably a lot more people who are better at me than that, but around I believe 3.5% to 4%, but usually below 4% is usually considered zero unemployment, right? It's quote unquote zero unemployment. There has to be a little bit of unemployment in order to have a healthy economy and keep the economy kind of churning along. It's kind of how regular economics kind of works. I'm not too familiar into that, so I'm not going to get into that. But I know some people, again, if you guys are watching this and you guys are really deep into that type of economic studies or topics, let me know if I'm wrong. I don't know much about it. I only talk about things that I really know much about. So, I try to stay as humble as possible. I don't know everything. I do read a lot, but, I read on stuff that I like to read, like everyone else, right, in this world. So again, if you guys know that I'm wrong, please let me know down below and correct me. I'm completely fine with that. I love learning new things, and if something's wrong with what I said, please let me know. So volatility here for the S&P 500, again, when it heads down to 12.50, right, or just somewhere around between 12 to 12.50, that value on the VIX, we tend to get an increase in vol. And this expansion of vol was clearly shown when we hit 12 here back in middle of December, and we continue to see a expansion, compression. So this is truly it's interesting to me because I would expect the vol expansion of vol to occur as we head into FOMC, but it seems like there's a chance that we might continue to see this compression of vol, and once we hit FOMC next week, right, on January 30th to January 31st is when we will have the FOMC meeting, the first FOMC meeting by the Federal Reserve. I think it's going to be truly a very good opportunity for vol to finally expand and actually have a large jump up higher, just like what we saw maybe back in September here, right? September to October, or back in, I believe, March. Yeah, March of last year, right? So overall, volatility has been slowly decreasing as the overall markets continue to move up higher. I mean, that's kind of a trend that you guys should know if you guys didn't know that. I mean, there we go. Right? Very simple explanation of the trend of the volatility index of the S&P 500 compared to the actual S&P 500 index, right? So I think it's pretty prudent to note that as we head into the first FOMC meeting of this year, it's you guys should be watching the VIX, right? Or the other iterations of VIX, right? UVXY, VIXY. Okay, these are the two tickers that I will be looking at. All right, these are two ETFs, the volatility ETFs that I'll be looking at, especially VIXY. But again, I mean, if you guys want to choose UVXY, that doesn't matter. They look the same, right? They're tracking the VIX too. So again, that's your preference, right? But this expansion of vol should be really interesting, and it should tell you whether or not you guys should be cutting back with less exposure compared to more exposure, because it's all about keeping your profits, right? That's something that many people struggle with, especially with not just even kind of pulling back into how many positions you have, but finding the right trade, right? Because when the market conditions are bad, right, it doesn't matter if that grade A technical chart pattern, it looks really good, because that chart pattern will be negated if the markets look bad, right? Because individual names will always try to follow the market at some degree or to some degree there, and if the market is breaking out and that chart pattern is bullish and is looking for a breakout, it will most likely break out as the market continues to move in that favor, right? In a bullish favor. So as we head into the usual historical seasonal weakness of February, which usually starts around February 2nd, February 1st to February 3rd, it'll be prudent to try to pull back some positions, try not to be too active, and maybe if you guys want to short some tickers, maybe have some game plans ready if the markets decide to pull back strongly from all-time highs right now, especially NASDAQ and the S&P 500. But again, like I've posted on my X page, my Twitter page, or on Instagram, you guys should be following me on those platforms, because I consistently post some very good data that you guys should be looking out for. We should be seeing good money inflow into small caps and mid cap stocks as the money flows outward from the tech leaders like software and even software and even semiconductors, right? Especially semiconductors, as they've had a pretty wild year last year with Nvidia or Broadcom, even Micron, right? Even Micron too. So and obviously AMD. So it's again, we're already seeing this kind of money inflow and outflow occurring right now, and really healthy sector rotations. Again, we have a dichotomy here of what could possibly happen, because again, the money is outflowing from leaders as usual. That's a constant money flux of leaders and laggards, as the money flows from the leaders into laggards and then vice versa. But right now we're trying to focus on the money flowing out of leaders and into laggards, which is why we've been following small caps and mid caps, especially the small caps there with IWM and TNA, or you guys can use UWM if you guys want to Well, if you guys don't like TNA, but again, it's the same thing. But if you guys want to keep it simple, just use IWM, the Russell 2000, right? So on one side we have that, but on the other hand, we're also having underlying healthy sector rotations, and that's what's making the markets a bit confusing, and will make it confusing as we head into February, which is seasonal weakness, and that seasonal weakness will spill over into March. All the while, we're probably going to see seasonal strength in most likely commodities like silver, palladium, gold, platinum, uranium, crude oil, right? So it's going to be pretty interesting to see money flowing out of those leaders and into those specific sectors. And I forgot one more, copper, right? Copper as well. So it can be looked upon as a healthy sector rotation, but at the same time, the market can actually move down because of that seasonal weakness. So again, I have yet to see if any of that, what I just said, is true. But based on the data that I have, the historical data, that's kind of the path that the market tends to move towards. So again, take my words with a grain of salt, because again, I'm just projecting into the future based on past historical data. So I'm not saying this is the truth, but this is a great way to position yourself to be ready when you need to pull back on positions, the amount of positions, and how much risk that you're putting on in each single trade. So again, this VIX, this expansion of VIX, right? This potential expansion of vol is something to take note of as we head into the end of January and into the first month of February, the first day and first week of February, actually. As again, the market really starts to hit that seasonal trend of weakness around February 1st to February 3rd. So you really want to try to not be too involved in the markets at that time if we do see that. Especially take profits in really, really good leaders if you have positions in them. But overall, just make sure you understand that the expansion of vol is going to happen. Again, VIX, whenever we head below 12.50, the value of 12.50 to 12, it becomes really prudent for you guys to understand that this expansion of vol will most likely happen and will create very hard trading conditions across the markets, not just one specific sector, but across the markets, right? And initially, when we do see a big move down in the markets, most sectors will follow. We'll see small pockets of strength, but those sectors with that small pocket of strength will still need a couple of minimum 2 weeks to really bottom out and then start reversing up higher and move inversely to the market, right? So again, like commodities, like I said, will most likely do that. It will follow the markets downside, and at one point it's going to find more relative strength compared to the markets and have that seasonal relative strength come in and obviously move inversely to the markets. Okay, so that is technically what I wanted to tell you guys today. And oh wow, 5 likes already. Hey Miner, what's up? What's up? So hey, welcome guys. Thank you guys so much for the likes, by the way. 5 likes. I mean, I believe we were at like 4 likes before we started. So that's amazing. You guys are, I can tell you guys really love the content. So make sure you guys leave a thumbs up down below whenever you have the chance. I mean, it takes a few seconds. So that's really helpful for me. It really helps YouTube understand that you guys are liking the content as well, and it'll push out more of my live streams, my videos out to your guys' home pages on YouTube. So hopefully you guys are really again enjoying the content, enjoying especially being able to apply the information that I give you guys. Again, the most important thing that I always point out about all the data and information that I tell you guys, all the analysis, is that it's applicable. All right, it's actionable. Okay, so again, thank you guys so much from the bottom of my heart. Really, truly, thank you guys for always liking these live streams, my videos, any type of uploads on any social media platforms. It really means the world to me. It means that you guys are actually getting some sort of actionable, valuable information, right? Hey, Miner, I see that you've texted some tickers there. So let me go to your tickers there. So yeah, guys. So this is kind of what I want to explain to you guys. Again, I'm not too sure what will happen with volatility because again, at the start of this week, I truly expected volatility to expand. Especially yesterday, especially even after a day like Friday, like Friday's candlestick on VIX. I would think that on Monday we weren't going to break below last Friday's low value on the VIX, but we eventually closed below it, which kind of caught me off guard there. And so we had that nice bounce on the VIX. Well, we did have a nice gap up on the VIX. Excuse me there on Monday, but we closed below Friday's low, and then today we continued to get crushed. So I think this is kind of setting up a slingshot effect where the VIX is not purposely is not the right word, but it feels like it's going down to that 12.50 to 12 value there for a purpose. All right, for a purpose to have a nice big expansion of vol as we head into the last week of January and into the FOMC meeting. So I'm sure trading conditions will definitely become harder as we head into the last week of January next week and into the last 2 days of January, which is when the first Federal Reserve's FOMC meeting will commence. Okay. Minor, as he says, so should we buy SQQQ? Yeah, I'm gonna be looking into that as we head more into the end of this month. Right, I'm not gonna be looking at that anytime this week or even next week. I'm just gonna be focusing on the different iterations of VIX, right? Like VIXY and UVXY, two of my favorite. Minor, I'm sure you know. I talk about these two a lot, UVXY and VIXY. But yeah, I'll definitely take a look at all the inverse ETFs on NASDAQ or the S&P 500 too. So I'll let you know in the CFO private chat room. But yeah, that's overall what I wanted to tell you guys. So for the people who are just joining in, welcome. Make sure you guys leave a thumbs up down below. But for the people who are watching the recording as well, if you guys have been liking what I just said here about the markets and what you guys should be expecting with the expansion of vol, the potential expansion of vol, make sure you guys leave a thumbs up down below. It really helps with the YouTube algorithm and also helps out my channel. So it'll be amazing to see some more likes into these live streams. But yeah, thank you guys so much for the 5 likes so far. But yeah, I mean, just again, watch the live stream again, the recording, to really understand what I said there, right? I'm telling you guys this because I want you guys to be prepared, right? Don't be left out in the woods with your pants down, right? You do not want to be that guy when the markets decide to completely flip around against you and you have way too much leverage on long positions and also too many at one time with each single position with a lot of risk exposure, right, on each single trade, right? You do not want to be that person. So again, slowly cut back on your positions, slowly cut back into how much risk you're willing to expose with each single trade, right? So that's kind of my last advice here for you guys as we head into the end of the month and into the seasonal weakness of February, which should spill over into mid to late March. All right, so Minor, let's get into your tickers. Ooh, snow, huh? Snow. Okay, Minor, I think I'm gonna get into this tomorrow. I really like snow here. Valuation wise, I don't think so. But technically, this looks really good. I mean, look at this. I was looking at snow twice here since its IPO. All right. So snow, this will be my third time looking to trade it. Well, not third time to look to trade. Third time to be looking at this from a bigger, longer term perspective, which is why, I've had these two entry points at different times here. But snow, it looks like we're clearing that psychological $200 level, and I think yeah, I on the weekly time frame it looks extended. I mean the RSI is really strong, right? I mean we're not even overbought. We are at 66.14 on the weekly time frame. That's good. All right, that's not overbought. We're not at the value of 70 on the RSI, but that usually indicates that the price is strong. There's buyers, right? There are a lot of buyers on the weekly time frame, and also on the daily time frame as well. And I love the volume. This is what caught my eye. The volume here is increasing as we're moving over the psychological $200 level that we've been rejecting off of 3 times so far. Here, and here, and even yesterday. Right, and today we completely blew over it and we decided to hit, and minor, I did tell you this earlier today when the market was live. It hit my 206 resistance level. Look at this. Right on the dot. All right, 206. Right, so today's highs was 205.97, $205.97. So it hit that 206 kind of, if you just want to round up, that 206 whole number level. And to be honest, I think we're going to break over this tomorrow. I wouldn't be surprised if we gap up over tomorrow and then kind of close that gap and move down and end up on a red day, since I don't want it to be too... Well, I really wouldn't want snow to get ahead of itself. And that's exactly what DDOG did, minor, by the way. But I'll get to that at the end. So I'm going to get into it right after Snowflake. So Snowflake, I really would not prefer to move too fast away. That's also going to increase the RSI in the daily time frame and maybe make it overbought tomorrow. But hey, if you're in today, really good entry point, especially if you got that entry point as it broke over 200 when we went from red to green on the daily candlestick. Good for you. Kudos to you. But still, another entry point can be made over 206. Right, this is another weekly resistance level that clearly can be seen on the weekly time frame, and also it's really close to the IPO lows. Right, so there have been a lot of stocks reversing back to their IPO lows. There have been very notable stocks that have been doing that since last year. So with Snow being a laggard tech stock, I truly think we can get a nice, at least revisit of the IPO lows. Right, and IPO lows was 208.55, and you can still make good money if you have a nice entry point over 206 and ride it up to 208.50. Right, the whole number level of 208.50. So there you have it. Okay, and then minor DDOG. So this one is interesting. On the weekly time frame, it got a bit ahead of itself, which is why it started out this week kind of ugly. This is a pullback here, and on the daily time frame, it doesn't look too good either. Right, so we had this inverted hammer candlestick, or if you guys want to call this an evening star doji, that's completely fine too. As long as you know that this is a reversal candlestick. And we got that confirmation of a reversal candlestick today when we decided to move below the previous low of the day, right? And we closed at lows too with increasing volume. Dun dun dun. Right? Not good. Not good. Okay? No bueno. No bueno at all. Alright, so with this increase in volume, I would say try not to focus too much on DDOG. I mean, this one needs to be consolidating a little bit more, moving a bit more sideways. I would say try to put your attention a bit more into Snow compared to DDOG when we're comparing software names, especially if this is your watch list going into tomorrow. But I would say DDOG would try and will try to retest the daily 10 SMA, and if it holds, that would be a very good sneaky buyback, right? To get a nice small entry point as it retests the daily 10 and bounces on top of it. So my projection here, my projected analysis in the future will possibly be something like this, where the price will most likely retest around at least 127 and coincide with the daily 10 SMA as well at that 127 level, and then it will bounce, and we will at least retest 131 and use it as a level of resistance. So that could be a potential day trade or swing trade, right? So keep those levels in mind on DDOG. But again, I would highly recommend you to focus more on SNO if you're trying to go long on both SNO and DDOG, because SNO has a better technical setup with increasing volume, great breakout over its kind of small, very, very small and tight consolidation range, and over that $200 psychological level, right? The psychological level is important. Okay. And then your third to last name here, BA. Yeah, so what I told you earlier, I'm still gonna keep that analysis in mind, right? So BA, downtrend. Yes, there's more interest in the stock as it kind of, I mean, it basically took out 98% of the gains that it had since it broke out November 13th on the backdrop of some really nice bullish catalyst. So, you know, I wish it filled in the gap here that it made in November 13th. Yeah. So, the reason why I paused is that I really would have liked this to fill in the gap and then bounce, because we would have had a pretty nice V-shaped recovery if that happened. But that did not occur, which means there is still more attraction to the shorts, the short sellers, to push this below again and break below the daily 200 not the SMA, the daily 200 level here, the psychological 200 level, and go all the way back down and retest 197.20ish to fully 100% erase all the gains from November 13th on this breakout, and also to fill in this gap. So I am still very much bearish on Boeing. It's going to be volatile. So if you want to short this one, go right ahead. This doesn't look too good. The daily 10 SMA, very, very large area of resistance now as you reject today, right at that 216.50 level and coinciding with the daily 10 SMA, plus not being able to hold over the daily 200 SMA, which has also flatlined. So as the stock continues to stay under the 10 SMA, the daily 21 SMA will also catch up. It's going to catch up, right? And as that is occurring, it's going to be seeing very volatile price action, right? I mean, the overall trend is going to be down, but we can see some very volatile price action, okay? I mean, this is just a rough picture of what I think could happen. So, I mean, don't take this too seriously. I've had people ask me, do you think that's what's gonna happen? Like, this is where the price is gonna go? No, I'm just trying to demonstrate to you guys the volatility. Boeing is gonna definitely see some volatility. Hey, what's up, guys? More people coming in. Awesome. So, Boeing is gonna be hard, but again, clear entry point tomorrow if we break below the low today, which is 211.13. So minor, if you want to short this one, get a short once it breaks below 211. That's it. And obviously you want to see an increase in selling volume, unlike today. Right, we're seeing the daily volume continuously falling down, which could be good for buyers, but also could be setting up a nice alley-oop, right? Nice alley-oop for sellers to come back in and aggressively push the price lower, right? So they want to push Boeing lower right now because that's what they've done. We had a nice stair to the upside, but we had an elevator run to the downside, as they say. I think I said that wrong, but it's okay. As long as you guys understand what I'm saying. So that's BA for you, and Tesla has earnings tomorrow after hours. Ooh, this will be interesting because it's Tesla, right? Tesla hasn't moved anywhere for the last 2 years. 3 years, I mean. Well, yeah, 3 years. Let's say 3 years. Yeah, it is 3 years. We're right back into the prices that we've seen in December of 2020. Right? I mean, that's not looking too good. It's not looking too good, right? So to be honest, for Tesla, I would really love if we gap down and we can get a very cheap entry point on the day of the earnings reaction, right after earnings, so on Thursday morning. So I would really love a Tesla gap down, maybe at 200 or maybe below 200, maybe at 198.50. So all my members know the levels that are given for Tesla. Oh, excuse me, guys. I'm drinking some LaCroix. So the sparkling water is really making me burpy. But it's really good. I have the pamplemousse. Pamplemouse? No, I know it's not called mouse, but I like to kind of screw up the names here. Pamplemouse is what I will call it. But Tesla, definitely, I would say I wouldn't play it into earnings. I wouldn't gamble it at all. Yes, it's been down for 5 consecutive weeks, including this week. But hey, the week just started, right? We have earnings. So who knows if we're going to turn green. But I'll tell you this, I'm not going to gamble earnings on Tesla. And ideally, I would want it to gap down and hit that psychological $200 level. I mean, Jesus, this $200 level is just popping up everywhere today, Miner, on your list here. I guess you're attracting that number, the $200 whole number dollar level, right? The psychological level. So Tesla, definitely keep these levels in mind. And Miner, I did the entire technical analysis on this last week, so make sure you watch the technical analysis video from the CFO Swinger Watch. Again, it was a private but now public technical analysis video, so make sure you watch that, Miner. You can just watch it on my channel or just go on last week's very long CFO Swinger Watch newsletter, scroll all the way down and click on that link. But Tesla could be still making this inverted head and shoulders. I got rid of the right shoulder here. I take it out right now, or not right now, last week, but we're still trying to make that inverted right shoulder. It's getting a bit deeper and diving a bit deeper than the left one, and it's kind of reaching the minimum, or the, I guess, maximum, the maximum of the inverted head. That's not good, right? That's not good for a bullish chart pattern, especially an inverted head and shoulders chart pattern. We want to stay afloat over the inverted head, like the left shoulder here, but we're not seeing that, so looking pretty bearish. So yeah, I don't really have much to say on Tesla, to be honest, because I'm just gonna wait for earnings. Anything that I say will be completely negated by the earnings reaction tomorrow after hours. So that's that on Tesla. I mean, yeah, so just watch out for that psychological $200 level, or 198.50 if you want to be specific. That is the specific level on the weekly time frame, the next immediate level of support. Or check the 212 level that we've been constantly seeing the buyers hold. It's been holding this level, but I highly recommend to not gamble earnings tomorrow after hours, right? Into after hours. Do not. Maybe Tesla bounces tomorrow as we head into earnings, but sell if you are in profits, or the IV alone decides to pump the premiums and you guys are in profit. Okay, so again, don't gamble Tesla. I've seen people lose a lot today as well on Netflix, so don't. Right, you guys will have better opportunities even after earnings, and also better opportunities even when the market decides to move down from its all-time high position as we head into that seasonal weakness, like I've just told you guys about 25 to 30 minutes ago. Yeah, 30 minutes ago. Okay, all right, Miner, so that's it for your watch list there. And yeah, I think I'm gonna end the live stream here. Oh, my back. But yeah, I mean, it's been a quite laid back and fun live stream session here for Tuesday. Again, apologies about the lateness. I started at 8:35 p.m. Pacific Standard Time or 11:35 p.m. Eastern Standard Time, but hopefully you guys still have made it here. I obviously see it here with those 5 likes, but and all the people who are just joining in now too. Welcome. So I've been live for about 40 minutes here, guys. So make sure for the people who have been coming in right now, make sure you guys watch the recording. I state some pretty important things that you guys should listen into, like I said in my description box down below, for the first 30 minutes or 30 to 35 minutes of this live stream. Okay, so make sure you guys watch. Really recommend you guys to watch. Okay, but yeah, I mean, it's a pretty good night for me. Drinking my LaCroix, which also, by the way, fun fact, ticker symbol for LaCroix is Fizz, National Beverage Corps. Fizz. Take a look at this one. Looks very nice. Really nice base. It's been consolidating for 4 years. Or 3+ years. Very fun looking name, doesn't it? I mean, this is really nice. Wink, wink. All right. Okay, well, that's it from Mr. CFO. Mr. Andrew here. Hopefully that was a very helpful live stream. Again, take a look at the very first 30 to 35 minutes of the live stream. Take note of what I said about the VIX, the volatility index of the S&P 500, and continue to have VIXY and UVXY as a part of your weekly watch list until we head into the end of the month and into the new day and week of February, which is where we immediately see that seasonal weakness coming in. Okay? Have a great rest of your night, guys, and I'll see you guys on Thursday at the same time, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Good luck, everyone, and thank you so much for watching.